Hey everyone, welcome back for another deep dive. Today, we're syncing up with you on all things Bitcoin, especially those recent market moves that have everyone buzzing.
Yeah, always interesting to see what's.
Got everyone talking?
We'll unpack the latest analysis, but also, zoom out to see where things might be heading in the broader crypto world.
Sounds good.
You've got your eye on the prize, understanding those price swings and what's really driving them. So we're tapping into two sources to get you there. First, we've got a Bitcoin analyst's take on the nitty-gritty chart patterns. Then we'll pivot to a CNBC Crypto World episode
Okay.
that'll give us that big picture perspective you're looking for.
It's always fascinating to see how those micro and macro trends, you know,
Huh.
interact in the crypto space.
Absolutely. So our Bitcoin analyst is pretty into this thing called Elliott Wave theory. Now, before you bounce thinking it's all super technical, it's actually pretty intuitive. Imagine a surfer timing their ride on a wave. Elliott Wave theory is kind of like that. But for market trends,
It's about spotting those repeating patterns of peaks and dips in the price charts, helping us anticipate those ride-the-wave moments.
exactly. And what's intriguing here is that this analyst isn't just fixated on those short-term ripples. He's actually calling for a potential short-term upswing, even suggesting Bitcoin might be finishing up an upward wave as we speak. Pretty bullish. He even throws out a possible target range of $73,500 to $74,400. But, and this is crucial, he emphasizes the importance of those bigger market trends,
Right.
the ones we'll be digging into from the CNBC segment. He's cautious about getting too caught up in the short-term noise, reminding us that context is key.
Which makes total sense. So while this analyst is optimistic, he's also thrown out some watch out for levels, right? Like if Bitcoin dips below yesterday's low, this whole wave prediction might be a bust. He even used the term invalidation point, if I remember correctly.
You got it. Think of it like setting up a series of tests. That price point, yesterday's low, is a make or break level. If Bitcoin breaks below that support, it throws his prediction off kilter and signals you might need to rethink your strategy. But it's not just about where it might fall. He also pointed to those support levels it's been holding steady at. Those could be signs of real strength, indicating the upward momentum has legs.
Okay, so it's not all smooth sailing. There are these critical thresholds to keep our eyes on. And he mentioned that $73,500 to $74,400 range a few times. What happens if Bitcoin actually hits those numbers? Does that make or break too?
That range could be a crucial battleground for sure. Think of it like a fence Bitcoin needs to break through. If it powers through that $73,500 to $74,400 resistance zone, it's a super bullish sign, suggesting it's got the momentum to climb even higher. But if it stalls out there, we might be in for a pullback. It's a real tug-of-war zone to watch.
A crypto showdown. I'm ready for it. Speaking of the bigger picture, let's dive into that CNBC Crypto World episode you mentioned. They kicked things off, highlighting Bitcoin's stellar week, up a solid 9%. It even outperformed Ethereum and Solana, which also saw gains, but not quite as impressive.
That's a really important detail to catch. Bitcoin flexing its muscles like that suggests there might be some unique factors at play, something beyond the general crypto market sentiment.
And speaking of factors, the CNBC episode did touch on some interesting economic forces that could be shaping things, like the European Central Bank slashing interest rates, their third cut this year. And of course, there's the whole U.S. election thing looming on the horizon. What kind of impact could those events have on the crypto world?
Well, you're probably already feeling the effects of those interest rate cuts in your own life. Maybe your savings aren't growing as fast as they used to. It's a common side effect. And some investors see this as a prime opportunity to move their money into alternative assets like crypto, hoping for better returns. As for the election, well, that's always a wild card, especially with crypto being such a hot button issue these days.
Definitely unpredictable. And speaking of unpredictable, they also dove into this Trump-backed crypto project, World Liberty Financial. It's got this almost movie-esque vibe to it. The Trump family is actually getting a cut of the revenue, which is interesting, to say the least.
It's definitely caught people's attention, but it's important to approach this one with a critical eye. While their involvement is noteworthy, it doesn't necessarily guarantee the project's success or legitimacy.
Well, separating the hype from reality.
Yeah.
So they've got this gold paper thing, and their goal was to raise a hefty chunk of change from investors, something like $300 million, right?
That was the target, but they've fallen significantly short. So far, they've only managed to raise about $13 million, a pretty big gap. It'll be interesting to see if they can gain more traction, especially considering the skepticism surrounding Trump's foray into the crypto world.
Definitely a lot of eyes on that one. But shifting gears, let's unpack this whole VC funding landscape. The CNBC episode featured an interview with Chris Matino from Crunchbase, and he dropped some serious knowledge about where the smart money is flowing in the Web3 space. And get this, VC funding for Web3 is actually up compared to last year.
That's true. But it's only one piece of the puzzle.
I'm sensing a but coming, and I'm ready for it. What's the missing piece?
Well, while the total amount invested is up, the actual number of deals is shrinking. This marks the second quarter in a row where we've seen this slowdown in deal flow. It's a potential yellow flag that we need to pay attention to.
So more money is being invested overall, but fewer projects are actually getting funded. What's the takeaway there? What does this VC slowdown really tell us about the state of Web3?
It could be a sign of a broader shift in investor sentiment. Remember all that hype surrounding Web3? Well, it seems like some of that initial excitement is starting to cool down, particularly with the current economic uncertainty. VCs are getting more selective, shifting their focus towards projects that offer real-world utility and long-term potential, not just speculative bets.
So less hype, more substance. Is that what you're getting at?
Exactly. The CNBC episode highlighted a few areas where VC interest is actually growing, like security, metaverse technologies, and infrastructure projects. Essentially, they're looking for solutions to real-world problems, things with staying power, not just fleeting trends.
That makes sense. They did mention that NFTs and blockchain gaming have lost some of their shine. Do you think this is a temporary dip, or are those sectors on their way out?
It's still too early to say for sure. Remember, these things tend to move in cycles. What's hot today might be old news tomorrow and vice versa.
Always those cycles. Okay, before we get lost in the weeds, let's do a quick recap of what we've covered so far. So we got this Bitcoin analyst, and he seems pretty optimistic, but with a few, proceed with caution signs out there. And then there's the whole crypto landscape.
Right.
Seemingly transitioning from hype mania to show me the money, less about chasing the latest trend and more about, real-world solutions. What else stood out to you as we were diving into these horses?
You've hit the nail on the head with those key takeaways. It seems Bitcoin is trying to catch a wave, but that $73,500 to $74,400 resistance zone is a real hurdle to watch. And zooming out, it's clear that VCs are becoming much more discerning with their investments in the Web3 space. Sustainability is the name of the game now.
Makes sense, right? Gone are the days of throwing money at anything with blockchain attached.
Yeah.
They want to see their investments translate into real-world impact.
Precisely. It's about identifying those projects that aren't just riding the hype cycle, but are truly building something innovative and lasting.
So for our listener who's navigating the world of crypto, what's the key takeaway here? What should they be focusing on amidst all this information?
It boils down to staying informed and asking the right questions. Don't get swept up in the hype. And always approach things with a healthy dose of skepticism. Look for projects tackling real problems, with strong teams and sustainable models. Remember, it's your money, your investment. Do your own research and make informed decisions.
Love that. Do your research. And maybe don't bet the farm on a meme coin just because your favorite influencer is pushing it.
Exactly. And here's a final thought to ponder, especially given the shift in VC funding we discussed. If the smart money is consolidating around a smaller number of high-potential projects, what does that mean for all those smaller players who thrived during the peak of the hype cycle? Will they adapt and evolve, or will they fade away?
Ooh, that's a great question. Plenty to think about there. Well, a huge thanks to you for diving into the depths of crypto with me today. And for our listener, keep exploring, keep asking those critical questions, and we'll catch you on the next deep dive.